This morning, Jolt's job openings came in lighter than expected. And in response, we had a brief move lower on the US dollar, but then it has quickly kind of captured that lost ground. And yet at the same time, we've got gold continuing its overall rally. I'm looking at a 5-minute chart. You can see right around 10 o'clock when the number came out that gold actually started to continue its rally, pulling back slightly at the time of recording this. But overall, gold is still very much up. If we were to take a look at a daily chart, for example, you can see the trend here is still very intact and bulls are in full control. The stock market continues to roll along here, and the NASDAQ's actually making some ground, up 0.5% at the time of recording. Meanwhile, Dow Jones is flat and the Russell is slightly lower today. So in this video, I want to talk about the Jolt's job openings, the consumer sentiment data that came out, and what this really means. Is the Fed still going to cut rates, or are rate cuts coming to a close? That has huge potential energy movements in the markets that we need to talk about, and with elections so close, there's just no shortage of potential volatility that could come out of the next few weeks. And as we get started in this video, I wanted to mention briefly today's video sponsor, Vantage. Vantage allows non-US traders to trade CFDs, Forex, and so much more all in one brokerage. And just as a reference to show you all the different things you can trade on this brokerage, you can see there is Forex, indices, commodities, US equity CFDs, right? So if you want to trade individual stocks, there's so many things. In fact, I've never seen a brokerage that has more offerings for things to trade in one singular platform. Not only that, Vantage also offers generous amounts of leverage to those looking for that, and they offer a nice deposit bonus for people who are looking to sign up. So all the information for Vantage can be found down below in the description to see if they're the right broker for you. Now back to the video. So let's take a closer look at this Jolt's job openings data point. And if we zoom in over here, what we can see is that the actual data came out at 7.44 million job openings created compared to the forecast at 7.98. Noticeably, they also revised the previous number down slightly from 8.04 million down to 7.86 million. So a little bit of a slower jobs data print that came out of the US today. And this kind of continues the overall downward trend that we've been seeing in Jolt's. We were seemingly flattening here, and then a little bit of a cooling off effect here in this latest data point. And when we look at the dollar index on a daily chart, you can see we are still staying relatively above this 104 level, which I have mentioned a couple times in my videos recently as being a really important level for dollar bulls. And I am currently still short EURUSD. This is a dollar bullish play that I have on the 4-hour chart currently open. And I actually shared this inside of our Discord room. I am currently looking for this level to potentially close underneath the lows. If that happens, I'm going to go ahead and trail my stop loss into profit on this position that I took. And you can see under the NIX trade section and then Forex trades, this is where the EURUSD short position was shared. The full breakdown, analysis, and all of the trade details were shared with members in the group. I risked 54 pips on this and quoted the reasons basically being a strong downtrend, dollar strong off of recent higher than expected inflation readings, and that with high government spending expected, I do think that inflation will remain sort of, there's a kind of flooring to how low I think inflation could go, which could continue to keep the dollar relatively strong off of higher expectations for inflation. Meanwhile, the ECB, the European Central Bank, is cutting rates pretty aggressively, and that divergence, I think, has the potential to continue to make euro dollar look weak. And if you're wondering, Nick, that's all great big words and stuff, but how did you actually find that idea? The reason is because it popped up in the top setups algorithm on the Edgefinder's top setups watch list page. Now on this page, it's looking at all the different economic data, GDP, PMI data, retail sales, inflation, employment data, interest rates, etc. And what we're looking at here is essentially the overall scoring of the EURUSD based on all of those different factors. And it also includes things like the commitment of traders report to track institutional money, retail positioning, seasonality, and the overall trend of the market. We're getting a -8 overall, which is enough of a bearish reading for me to look for possible short setups on this position. When price pulled back a few days ago, I went ahead and executed the short trade and now have already trimmed my stop loss slightly and plan to trail it into profit if you get a nice closure below the lows, and all of these notifications will be sent to members in the Discord. I do also want to mention, by the way, that if you don't already have access to the Edgefinder during this week's free trial event, all the way until Friday, the Edgefinder is free to the public. All you have to do in order to get access for this free week is to apply down below in the description and make sure you enter the correct details so that we can send you access to the the Edge Finder to try it until Friday. And Bitcoin is absolutely off to the races here, trading currently at 71,880. It's been a while since we've been this high on Bitcoin, and we're actually very close to an all-time closing or intraday high around 73,800. Looks like, in my opinion, we're increasingly likely to go there. And I do currently have a position on the ETF IBIT, which tracks the Bitcoin kind of movements. And this trade is going pretty well so far. And I do think that it has potential to continue. I've trailed my stop loss currently into profit on Bitcoin, and I am looking for this to continue. If we get any sort of higher low in this market, like let's just say we get Bitcoin doing something like this over the coming days, I'll look to potentially trail stops once and maybe even again if we can continue to see higher lows and higher highs on the Bitcoin chart. But so far, price action looked great. This entry ended up being a really nice timing on this move. And again, this was also shared in our Discord group. This is what the trade alert looked like. You can see every detail that I shared on this was put into the group for context on why I took the position in full detail. If you'd like to get access to the Discord, there will be a link down below in the description to sign up for our VIP service. You can find it in a promo code down below in the description. Gold is flirting with all-time highs yet again here today and close to an all-time closing high. Depending on how this candle closes, if you get the close, if it were to close right now at the time of recording, that would be an all-time closing high. And yet again for this year's kind of win streak on gold. Price seems really strong here. In my view, I'm not personally buying gold at this time. And I think that the path of least resistance is to the upside, but I don't really have the things that I'm looking for, the criteria that I'm looking for in order to take a bullish setup. I wait for things on the top setups page to show up, and gold is currently not there. We can pull up the metals for a second, and what you can see here is that gold is currently getting a neutral reading. And a part of this reasoning here is that basically when we look at gold's overall score of -2, some of the kind of things hurting it are some of the strong economic data that's come out of the US recently relative to forecasts. So we've seen stronger than expected NFP reports. We've seen retail sales coming in better than expected. Services PMI were better than expected. Seasonally, it's not the best time of year to be looking at gold on the bullish side. So we combine these factors, and this just has me cautious currently. If this flips into a bullish territory, I may look to buy dips if I can get them, but currently have no interest in trading gold. The NASDAQ is very close to an all-time high here. Not quite there, but it does look like, in my opinion, it's going to try and just chase up into this level going into the election. I know people are sort of uncertain about what's going to happen with the election, but I think that once you get a more decisive decision, the market's just going to probably continue its upward trend. In my view, regardless of which candidate you get as the president, I think the market will just welcome the lift of that uncertainty of who's going to be the president. And that could be a potentially bullish thing, meaning whether it's Trump or whether it's Harris, if you just get the decision is now, out there and companies can just kind of move on and corporations can continue, the market can kind of just say, look, now we have our answer. That's always, something to consider, is people just don't like the uncertainty of it. Once that passes, it could potentially allow people to sort of re-enter the market, come back in, and continue to push things higher. I am still bullish. We'll see if I'm right about that. I could be dead wrong. As always with these ideas that I'm sharing, I'm just sharing my personal opinions in the market, and I could be completely incorrect about things, as I have been many times in my YouTube channel career. It happens, but I just wanted to share my personal opinion is that we continue to see what we have this year, which has been a very strong stock market that takes every opportunity to buy dips and continue pushing higher, since we have the Fed still tentatively on our side, cutting rates, at least for now. And at the same time, we've got corporate earnings that, we'll see how they perform in the coming weeks. We do have a lot of big tech earnings this week, and we'll have to see. But so far, looking decently strong for corporate earnings. Again, growth in the economy, jobs are still out there, inflation's coming down, interest rates look good. For me, stocks most likely move higher until something in that story breaks and turns sour. Thanks for watching this video, and on the screen right now, you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.